Is there any other thing, in terms of basics with holdcos that people should know before trying to start one, or like um anything that most people might not know about holdcos that is like something to important to know actually?
Well, I would say that, the liability side of a holdco is not guaranteed. Okay. Now you hear this a lot, even if you Google it online.
What do you mean liability side? Like director's liability? Like if
That's
the
exactly where I'm leading to.
okay.
So some people may think that if you have a holding company set up, that you are untouchable. All the money that you have there is,
Mm-hmm.
free and clear. But there are
Mm-hmm.
certain situations where, if there's fraud or if there's wrongful causes, that you're not necessarily protected pushing the
Mm-hmm.
money into the holdco. So I don't want to say that it is completely a tax shield or a liability shield to all your
Mm-hmm.
wealth. If you operate your business in a trustworthy manner, then
Mm-hmm.
most likely it will be. Now, another
Okay.
aspect of a holding company that I would say may, let's say, confuse or I shouldn't say confuse. I should say more so complicate is
Mm-hmm.
with financing. Now, when you're investing in real estate and other things that require financing, it is typically more difficult to obtain financing when using a holding company as opposed to using yourself individually. So that
Mm-hmm.
those are I would say the two things that maybe for people that are new to looking into this holding company structure to consider.
Mm-hmm. So when you say about difficulty in financing, is it that just that versus the individual, or it's more difficult to get financing with the holdco versus an opco?
Well,
Or
so okay,
is it the
so
same?
that's a great question. So I'm more so referring to, let's say, for example, you already own a house and you're looking at an investment property. If you were to
Okay.
buy that investment property in your name personally,
Mm-hmm.
you have your wage, you have, let's say, a potential rent roll, and the
Mm-hmm.
banks are a lot more comfortable lending to you individually as
Mm-hmm.
opposed to a corporation. And the reason for that is it's two separate wings of a bank. With a individual, you're dealing with the mortgage department. With a company, you're
Okay.
dealing with commercial lending. Commercial lending,
Oh, I get
com-
it. I get what you mean.
yeah, so commercial lending has a whole different way of looking at financing real estate and other ventures like land and that sort of thing. So it does add a layer of difficulty. You may even be
Mm-hmm.
forced to up your reporting standards from, let's say, if you have an operating company and you're doing a compilation or a notice to reader that
Mm-hmm.
costs, if people are familiar with that, it costs uh, the lowest level of accounting fees you can charge for a corporate
Mm-hmm.
year end. But
Yeah.
when you're working with a bank to get financing on an investment, sometimes they'll make you up the reporting to, let's say, a review or even an audit. And those are
Mm-hmm.
audited financials or reviewed financial statements. And
Yeah.
those will add a lot more accounting costs to
Mm-hmm.
uh, to achieve this financing.
Oh, okay. That makes sense since it's kind of harder to chase after hold goals compared to a person individually should they default on the loan or something. I think that might have something to do with it as well, right? Like in terms of
Yes,
compliance with the financing.
you're absolutely right. Yes, again, and again, like if you're a small business, chances are the bank will have a personal guarantee with you anyways, so they can
Hmm.
come after you and your corporation. But you're right; it just adds another layer of complexity for the banks. So
Hmm.
typically, they make it more challenging to get that financing in a
Hmm.
corporation as opposed to individually.
Okay, awesome.